Please, can you see my screen?
Yes, sir. I can see your screen. We can see your screen.
Okay, so I'll proceed now. So first of all, for introductions, as health professionals, we know that ignoring small symptoms today can lead to big problems in the future. So, in the same way, money has the same kind of behavior, or handling money has the same kind of behavior. If you don't treat the money issue early, then the financial sickness can become worse over time. And that's why today we're talking about Money RX, which is a simple prescription to keep your finances healthy. When we say finances, not just savings, but also investments. So a bit about me. As Fatima introduced, my name is Chukwuka Edoziuno. I'm a corporate finance analyst. I'm trained in corporate finance and investments in Nigeria's financial sector. But outside my work, I like to help young people and particularly non-finance professionals to develop proper personal finance skills and start investing. And my mission is to simplify wealth building by having one conversation at a time, and not just with individuals, but also with groups like medics on duty. And one fun fact that I once explained how ETFs, that is exchange traded funds, which we'll learn about shortly, I once explained ETFs using jollof rice. And when we get to that section, I will explain ETFs using jollof rice again. Then, based on qualification, I'm a CFA Level 3 candidate, which is a global finance exam. I'm a chartered accountant with the Institute of Accountants of Nigeria and have an accounting degree from University of Lagos. So let's get into detail. In Nigeria today, we are aware that the economy is not exactly smiling, and we have inflation at 20%, we have interest rate at 27%. So those things are not as rosy as they were maybe a couple of decades ago. However, how people still need to save money. People need to still set aside money, but if saving money alone in Nigeria is not good enough for your financial goals because of the previous issues I mentioned before. So first of all, what are savings? Savings are money you set aside for future use instead of being spent immediately. So it is part of the income you get after deducting expenses and other things you need to use money for. The money that left aside is what we call savings. And in today's Nigeria, savings are important because they're a source of emergency fund for unexpected events, positive or negative. For example, if maybe your pet falls ill, you need to take out of your savings to out of emergency fund to take care of it. Or if an opportunity comes by, for example, this jackpot, okay, it has gone down a little bit, but before now, there was a very high wave of jackpot. So people were willing to give up some of their properties for very low prices. So if you had an emergency fund, you can take advantage of opportunities. So that's why savings are good. And also, you can use money you set aside for savings to make planned purchases, like paying for your child's university fees. Saving is also vital for long-term goals like retirement. And building savings provides a sense of financial stability and the foundation for future prosperity. So while we've seen that savings are very good, it's good to have a savings culture. We have noted, especially with in finance world, we have understood that based on history and what we've seen with reality, with the markets, savings alone is not enough. Why? First of all, savings will cost you money. If all you do is to put your money in the bank, maybe the big banks in Nigeria, because you feel, oh, I can always access it or it's secure. That's that activity, that act of putting money in the bank is costing you money. How do I mean? Inflation and Naira depreciation will erode the value of that money you put in the bank over time. For example, let's say you put 100 million in the bank 2020, let's say 2020, or even 2022, by June 2023, when the CBN floated in Naira moved from 450 to a dollar to like about 800, 900, and then today is around 1,500. So if your money had been in the bank before, like by that at that time, you'd have actually lost money because the interest that savings accounts in Nigeria pay to you is very tiny, as in it will hinder your wealth creation. There's the opportunity cost of putting your money in the bank is to invest it. And in addition, The one issue with savings is that some savings accounts put monthly maintenance fees or they require minimum balance, which if they keep charging you that maintenance fee every month, the small interest they're giving you minus the maintenance fee is just going to keep reducing the value of the money you are putting in the bank. So we've seen that savings alone is not ideal. It's not the best thing to do in today's Nigeria. So what then is investing and how does investing differ from saving? So at this point, I would like to hear some feedback. So there's a on this slide there are two pictures. There's a picture of seeds in a jar, and there's a picture of a tree that's grown and is now bearing fruits. So which of these two do we think is savings, and which of these two? Okay, of course, if one is savings, the other is investing. So who can mention which one is savings and which one they think is investing? You can mute your mic and speak if you want to speak. Anyone? Okay, if there's no volunteer, I will go ahead and help everyone. So the image on the left here, where we are seeing, so a seed, these seeds are like your money, your is the amount of disposable income you have after you've deducted
The one
all.
in the jar is saving, then the one in the tree is investing.
Exactly. That's very correct. So the one in the jar is when you get when you get income and you deducted the expenses and the excess as which is disposable income is if you save that money in the bank, then it's like you just putting your seed in a jar. Imagine somebody having so many seeds and just putting in a jar. That seed cannot grow. That's how savings is in Nigeria's reality today. But if you take those seeds, which is the money or the savings you have, and you invest it in well monitored or proper investment opportunities or assets, then over time, your that small amount you're putting will grow into a tree that will even start bringing its own fruit. So that is the difference between investing and saving. Saving is just putting money aside in a bank account or even in physical cash. But investing is you planting your money and letting it grow over time. I hope this is clear. So next slide. So after as we've seen the difference between saving and investing, what are the investment options in Nigeria? Well, before we even jump into the investment options, there are some things that okay, I'm calling it the investment RX. In fact, let me just share something. Before today, I didn't know I didn't know what RX means. I usually see it on signboards on pharmacies, but I never could tell I didn't know what RX is until I now said, let me even Google this RX and see what it is. And then I discovered that RX means prescription. So my investment prescription for all of us on the call today. There are some things you need to clarify before you decide on how to invest. First of all, your investment objective. What are you looking to achieve? Is it capital appreciation? Is it income? Is it principal protection or is it growth? You need to clarify your investment objective. How much return are you looking for? Then also understand that risk is very important. What is your risk tolerance? So I see returns and risk as two sides of the same coin. The higher your risk, the higher your expected return. If you're someone that doesn't like risk too much, then you should not expect so much return because risk and return go the same way. Also consider, are you risk averse? Do you like risk or do you hate risk? These considerations will affect how you invest. Another thing is your investment horizon. How long are you expecting to invest for? Are you looking to invest for 2 months, for 5 years, 10 years, or for 3 weeks? So the length of time you're investing will affect how you invest. The fourth thing you should consider is your liquidity needs. Do you think in the next 2 to 3 weeks or next 1 year, I might need to sell these assets because I need cash to maybe buy a car, I need cash to pay for university expenses, I need cash to settle one or two bills at home. If you have liquidity needs means you need money soon. If you think you need money soon, then you need to consider that before you invest. But if you think that, okay, no, this particular sum I have, I can leave it for a year, for 2 years, or 10 years, then that's liquidity need or the need for cash now will guide how you invest, going forward. And then the fifth thing that we need to consider before you invest is your tax and legal considerations, because some investments have higher tax rates than other investments. For example, if you're investing in stocks and then they pay you dividends, you'll pay withholding tax. Dividends are charged at your normal personal income tax rates. On the other hand, if you're investing in fixed income like fixed deposits or placements, withholding tax that's charged on that particular asset is lower, just 10%. So we'll dive deeper into this in a few upcoming slides. And then finally, the last RX you need to consider before you invest is your unique circumstances. For example, your beliefs, your preferences, your circumstances, because we are all different individuals, even though we might all be doctors, might all be nurses, might all be pharmacists, pharmacologists, pharmacists, we are unique because we have specific features or specific preferences or circumstances that might make us different. So the fact that Farm A is investing in cryptocurrency doesn't mean that Farm B should invest in cryptocurrency, because both of them are different, unique individuals that need to consider their preferences before they invest. Also, you might think that, okay, I don't want to invest in this sector that produces guns because I don't like violence. If that's the case, you need to factor in those unique circumstances before you decide to invest. So now that we are done with the investment RX, let's go into the actual investments assets that are available in Nigeria today. The first one is stocks. And to invest in stocks simply means that you are buying shares in publicly listed companies. So just a little fun fact. Currently, there are about 4 or 5 medical related companies on the stock exchange. There's Fitsin, there is Meteor, there is Nemeth, there's Maybaker, and there's one last one. So companies that are publicly listed enable you to buy their shares on the stock exchange. And so what does it mean to invest in the stock market? Just like every living thing is made up of millions of cells, every company is divided into shares, smaller pieces which you can own, which I can own. So this is the case even if you don't own a company. You don't even have to own to go and register your own company to be a shareholder. You can actually just buy shares of an existing company that is listed on the stock exchange. So everyone who owns these shares is called a shareholder. And then what is the benefit of investing in the stock market? Okay, we'll get to that shortly. And then to invest in the stock market, what you just do is to go on the NGX, which is the Nigerian Exchange Limited, Nigeria's own stock market, and then buy the shares of one or more companies. That's all. That's all you have to do to become a shareholder. You can be a shareholder in many companies. You can choose to, let's say, if you like Dangote's company, you can buy shares in Dangote's company. If you like the one I mentioned before, Fitsin or Mikio, or if you want to diversify away from your own particular sector, you can do the banks or you can do insurance companies. But there are about 150 companies on the NGX today that you can buy their shares and just invest. And whenever they are doing any activity, they are paying dividends, they are having meetings, they'll call you to come and attend because you're a shareholder. So that's the bottom line of investing in stock markets. And then some listed companies in Nigeria include Dangote Cement, MTN, Cadbury, Nestle, GTCO. There are many, like 150. So you have a lot of options to choose from. Then advantage of investing in stock markets. First of all, some companies pay dividends. The banks pay dividends like almost every year. Then some other companies pay dividends like Dangote Cement, Seplat, Oil and Gas, Fixing pays dividends too. Unilever pays dividends. So that's an advantage of investing in stock market. Then we also have capital appreciation. You buy a share at, let's say, 14 naira. In the next 3 months is now 15 naira. You have gained 10 naira. And also, an advantage is that you'll be able to participate in the company's operations via annual general meetings. So annual general meetings are set up for all shareholders to attend to understand what's happening with the company, to get updates and so on. And then a very important advantage is that you can easily enter and exit the stock market. That means you can easily buy and can easily sell the shares. However, some companies are illiquid, meaning that they don't trade very frequently, so it might be tough to enter or exit. But generally speaking, Stock market is a means you can enter and exit without so much difficulty. However, with every good side, everything has an advantage and disadvantage. A downside of investing in stock markets is volatility. Prices can change very frequently. You might buy at 15 naira, then tomorrow price drops to 45 naira. That's how the market works. As people trade, prices go up and down. And also, you need some time to understand what this company does. You need to read their financial statements, read analyst reports, so you'll be able to tell this company, is it doing well? Are they going to do well in the future? And so on. And then a major disadvantage is that your principal is not guaranteed. The stock market, investing in stock market is for people that have higher than like a very high risk appetite or they have high risk tolerance. You can manage that volatility. You can invest 100,000 naira today. 1 week time is already 70,000 naira because market is going down. So you need to be very, very, very sure that you have you can manage that risk of your money, of volatility in the value of your investments. And also, because it's a market, the activity of other people can also affect your own results because market is comprised of many sellers and buyers. So what they do, if everyone is selling, and the price is falling, it's going to affect you. If everyone is buying and buying and buying, and the price is rising, it will benefit you. So these are the things to keep in mind. First of all, stocks is for people that have high risk tolerance, and you can manage that volatility in the markets. Second asset that's available that you can invest in is fixed income. And why is it called fixed income? It's called that because you know exactly how much you will earn when it matures. So fixed income investments are essentially loans given to companies or governments. Let's say, for example, a company wants to, a government, federal government is raising, wants to borrow 100 billion naira. It will to ask you to come and invest, come and give me this money, I'll pay you back with interest. That is all fixed, that's all about fixed income. Then investors will receive regular interest payments like coupons, maybe every 6 months or every 3 months. That's quarterly or semi-annually, depending on how it is structured. Then at the maturity date, the borrower will pay you the original amount plus final interest. Every fixed income investment has a specific maturity date, and fixed income it usually has a lower risk profile because the amount of interest is fixed. There's a promise that I'm going to pay you back this money I'm owing you. That's fixed income. However, remember what I said at the beginning that risk and return go along the same way. If the risk is high, then you can expect higher returns from that investment. If the risk is low, you can expect lower return from that investment. Stocks, high risk, but you can earn a lot from it. Fixed income, lower risk, so the return is not as high as what you get with stocks. And also, fixed income investments help you to stabilize your portfolio because if you have stocks that is very volatile, by the time you add some fixed income to it, then the amount of volatility of the portfolio will reduce. However, there are some disadvantages to fixed income. Everything in life generally has advantage and disadvantage. Even when you guys, for example, when doctors give a drug or when you prescribe a particular drug, you say this drug on the leaflets that is inside the drug, you say that this drug has some side effects. It can cause drowsiness, it can cause something. So the same way, fixed income also has some side effects because it has lower returns compared to stocks. It may be difficult to get your money before it matures because you have said, okay, I'm going to invest for 90 days, I'm going to invest for 180 days, I'm going to invest for 375 days. You cannot take that money out until it matures, otherwise you pay penalty fee. But for stocks, because it's kind of liquid, you can sell today and you get your money in 3 days' time because it takes time for the money to come to you, but you can get your money ASAP. But for fixed income, you can't. It may be difficult to touch that money until it matures. And then lastly, a major disadvantage of fixed income is that when there's high inflation in Nigeria and you were earning maybe let's say 10% before that inflation came, by the time your coupon is coming, or by the time that investment matures, the purchasing power of that money you invested would have dropped because inflation has increased over time. And then some fixed income investments, there's short term, there's medium term, there's long term. Short term, like fixed deposits, treasury bills, commercial papers. anything that can mature in a year's time or less than a year. Those are short term. And I've put some examples here that you can look at. There's rent money, there's wealth body, there's Picky Vest that we all know, there's credit pal, and there's medium term and there's long term. So it's mostly federal government. And actually, federal government has this savings bond that they offer to retail investors. It comes in 2 years and 3 years maturity, 16%, 15%. The rate changes over time, but it's a medium term bond for people that don't like to take so much risk. And then long term is the normal federal government bond, can last for up to 50 years. So at this point, I will stop if there's any question or any feedback. Or if there's a question, you can just, okay, no, actually, there's a section for question at the end. So if you have any question, you can note it down. When we get to the Q&A session, we can just treat those questions. Then the next investment opportunity or investment asset is called mutual funds and exchange traded funds. It's kind of a mouthful, but I'll try and summarize it as best as I can. So, for example, if you want to invest in stocks, you can either go on the NGX and buy Dangote stocks, maybe like 100 units. Like the case here, where if you want to buy, if you feel like eating fruits, you can go and buy orange for 100 naira, or you can now say, okay, let me buy many oranges for the same, many other fruits for the same 100 naira. As an investor, you can choose to buy assets directly, like the orange, or you can buy many assets indirectly, like buying a small basket of different fruits for 100 naira. So that's the difference between investing in the stock market directly and investing through a mutual fund. So a mutual fund enables you to buy many other assets compared to what you'll be able to do on the stock market directly. So a mutual fund is essentially a pool of money. So the investment manager comes and gathers, maybe let's say everyone in medics on duty. If you subscribe to a mutual fund, the investment manager will take all the money and then help you to invest in different stocks. Maybe to buy Dangote cement, to buy Dangote CP, to buy MTN, many securities that because you have pulled your money together as a team of investors, the investment manager will just invest that money on your behalf, unlike you going to look for what exactly I'm going to buy at different points in time. So mutual funds enable investors to diversify their investments without having to do the stress of, oh, which company is doing well now? What is the price today? Oh, when can I buy? Mutual fund just take away all that stress and say, you just invest in a mutual fund and the manager will manage all of that process for you. Then ETFs or exchange traded funds, they are very, very, very similar to mutual funds, but the only difference is that ETFs can be traded on the stock exchange like a normal stock. But mutual funds, you have to, before you can sell a mutual fund, you have to go back to the manager and say, okay, I want to redeem so and so number of units from my mutual fund, and then they'll do it for you at the end of the closing of the market close date. Now, if you recall, I said at the beginning I was going to give an example of ETFs using jollof rice. Let's say, for example, you want to eat jollof rice and you do not want to spend so much time on it. So you can either go to the market and buy the different ingredients by yourself and then you cook it. Or let's say, imagine you have a party. You can either go and do all of that stress and buy the different ingredients, the rice, the chicken, the oil, and cook the rice by yourself. Or you can just hire a caterer to help you cook the rice and even serve it in different plates for all your guests. That is what a mutual fund is like. Mutual fund and the ETF, they take away that stress of you trying to pick which stock to invest in, which fixed income to invest in, which CP is doing well, or which fixed deposit is doing well. They just tell you, don't worry, just bring the money and we're going to manage it for you by investing in the best assets. So a major factor is that all of these investment managers, they are licensed by the CBN in some cases or the Securities and Exchange Commission so that they do not mismanage your funds. But that's what mutual fund is essentially. And there's some mutual fund and ETFs in Nigeria. There's Afro Invest Equity Fund, there is Coral Balance Fund, there's Chapo Udana Money Market Fund, there's Betiva Banking ETF. There are so many. I just put an example here so we'll see what's available. So I hope it's clear about the difference between mutual fund and ETFs and how they work. If you have further questions, please note it down during the Q&A section. You can ask. Then the fourth example is real estate. And many people like real estate because it is relatable, it is real. You see what you're buying, you can touch it, you can feel it. And real estate is how landlords and co-landlords in Nigeria are earning income long term. If you're lucky, if you're lucky and you do not, you have your own house. You might not be able to relate what I'm about to say, but some of us, our landlord have increased the rent in the last 1 year, so he doesn't want to hear anything. If Nigeria is good for you, it's not good for the landlord, so he wants to increase the rent. So landlords, real estate enables you to actually earn income that can increase as inflation increases. So in that way, you do not have so much depreciation in your purchasing power because you can always raise rents. If your tenants say, I cannot pay, they will leave. You'll find someone else that wants to actually stay there. So real estate investing has been one of the most recognized methods in Nigeria in building wealth. And contrary to what you might think, you might say, oh, I don't have 100 million naira to build if an estate. You don't have to wait till you have that much. Today's market has advanced so much that with as little as 5K or 10K per month, you can start co-owning properties in Nigeria. But five simple ways to invest in real estate. Number one, which I just mentioned, you buy a building or you get a building that you inherited from your parents and you lease it out to tenants. You'll be getting income annually or monthly, as the case may be. Then there's also what we call real estate investment groups. And how this works is that a group of small people, or a small group of people come together, contribute money, and give it to a company to manage, to buy assets and manage it on their behalf. So it provides income and capital appreciation, but the issue is that you might not find a company that is very, very good at it. So that's real estate investment groups. There's also house flipping. House flipping means that you buy an undervalued property, maybe because it's abandoned, but it's in a very highbrow area like Ikoyi. You buy the building, renovate it, and then you sell it within 6 months at a higher price. That's what they call house flipping. You buy, you renovate, and you sell. But this one requires a lot of money because to buy a building in somewhere like Ikoyi or even Ikeja or anywhere, it requires some money. So this one is a bit for people that have a lot of money. But the previous one I mentioned, the real estate investment groups, you don't need to have all the money before you start. And there's also real estate investment trusts. This is similar to a real estate investment group, except that the trust is managed by a company. So the company looks for investors that will come and invest in its properties that it has. So that's real estate investment trust. You buy and operate properties that can produce income over time. So that's one of the options or simple way, or one of the ways you can invest in real estate. And then the last one that I'll mention is crowdfunding platforms. So this is useful if you want to join other people to invest in large real estate deals, majorly using online platforms. So in this case, this is when I mentioned I can actually start with 10K. Start with 10K, can do 10K per month in particular to buy a particular property. Then the company manages on your behalf and pays income over time. So these are the five simple ways to invest in real estate in Nigeria. The most popular one is the rental property and the real estate investment trust, but you can also explore real estate investment groups, house flipping, and crowdfunding platforms. Then finally, we'll be talking about dollar assets. These are, I mean, everyone in Nigeria can tell the story of how the Naira moved from 450 something to 1.5 that it is today. Someone that had USDs, dollars back then, would be smiling today because the value of his money has kind of almost tripled. No, more than tripled, in fact. So investing in foreign currency will help you to hedge against the depreciation in the value of the naira. But you have to be very careful of the exchange rate at the time you are buying the dollar. So investing in foreign currencies protects you from naira depreciation. It protects you from even inflation in Nigeria. And there are some available assets that you can use to invest in dollars. There's stocks, there's fixed income, there's real estate, there's mutual funds, there's ETFs. In fact, the exact kind of assets we have in Nigeria, in Naira, you can invest in those same kind of assets in the US or in any other country. We use US because US is the major currency in the world. So you can invest in US stocks using Bamboo, using Rise, using Chaka. You can invest in US fixed income using Piggyvest, Cowrywise, Optimus, You can invest. So these examples are just ways you can actually explore real estate and investing in foreign currency. And you can also, if you prefer to just hold your dollars, you can do that. Currency is also an asset. You can just buy dollar and hold it, protect yourself against naira depreciation, so that the exchange rate does not impact the future value of your savings or your investments. So the benefits of investing in foreign assets, first one, of course, it brings diversification across different countries. Importantly, it hedges against future naira depreciation, and then it can even increase your return that will enhance your overall gains. But the main issue, this part, issue with investing in foreign assets, it exposes you to foreign currency risk. So recently the naira has been appreciating, it's now around 1,400 and something. So if you had invested in the foreign currency when naira was 1.5 or 1.6, by now you'd be crying because the naira is now appreciating. And although everybody else in Nigeria will be happy that naira is appreciating, but you might not be happy because you are losing money as naira appreciates. So that's a risk of investing in foreign assets. And also, investing in foreign markets can be more complex because, for example, in the US, their capital gains tax is like 30%, and in Nigeria, just 10%. But there, imagine you are earning. In fact, transaction costs gone in that place is very high. Like, for example, I was trying to invest in one stock, Nvidia, this company that makes AI chips. I was trying to use Bamboo to invest in it, and so because this Bamboo they offer fractional investing, meaning that you can buy 0.000001 share, and because as a small investor, I don't want to take so much risk. I just bought a very small amount. They're charging me 1.5 for transaction costs to buy just one share. And I'm wondering, how much am I investing and how much am I paying for costs, for fees? But of course, there's somebody to complain to. I have to just bear it like that. Unlike here in Nigeria, when you're investing if you're trying to buy stocks on the NGX, how much are you charging? Like 400 naira or so. So the issue with foreign currency investment is that the transaction costs are very high. Now I can't even sell that stock because when I sell it, I have to pay on that 1,500 something. So I just left it there. So that's the issue with foreign investments. If you do not have enough money to cover the cost, it might just not make sense at the moment. Also, a very important drawback or challenge with investing in foreign assets is that you are exposed to diverse market risks, as in if Russia-Ukraine war is affecting USA, it's going to affect your investment. So if these different tensions that happen across the world, it just compounds the impact of those unrest on your portfolio. So before you invest in foreign stocks or foreign investments, just think about it very well. If you prefer to do US real estate, just check out these apps that can help you achieve that. If you prefer to do US fixed income, check out this app as well. But just remember the investment areas we spoke about before. Those factors should be considered before you even make a decision. Then finally, the last thing I'm going to mention is that we need to build a portfolio. What's a portfolio? A portfolio is a collection of different assets that you have into one account or into one structure. So it's good and important to build a portfolio. Don't invest all your money in stocks. Don't invest all your money in fixed income. Don't invest all your money in real estate. Split it, diversify it so that when something happens to the stock market, for example, your fixed income market will be stable. Or when the stock market is going up, it will cover for the slow growth in your fixed income investments. And there are many types. There are different types of diversification. You can invest in different sectors. You can invest. So let's say a sector, for example, don't invest your money in oil and gas. Move it to oil and gas, banking, industrial, consumer goods. Don't leave it in one sector. And even after you have done different sectors, inside that same sector, do not invest in just one company because if something happens to that company like this, bam, trouble. But within that same sector, let's take oil and gas, for example, there are many companies in the oil and gas sector in Nigeria. You can do Aradel, you can do Seplas, you can do Adova, just to make sure you reduce company-specific risk in that particular sector by investing in multiple companies rather, and then also diversify in different asset classes. As I said before, don't have all your money in one basket, in one particular asset. invest strategically. And finally, and also, yes, invest in different countries if you can. If you can manage it, you can just do that. And then lastly, that diversification. Mix your portfolio with short-term, medium-term, and long-term investment. Don't put all your money in short-term investment because the time is short, the amount of return you can get will be lower. Mix it short-term, medium-term, and long-term. Also, don't go and put all your money in long-term investment because if you cannot take it out when you need cash immediately, you might be stranded. You have to start, maybe you probably need to start borrowing from your colleagues or something. Just mix it very, very well so that you are well covered across all ground. You are diversified properly. So on the right here, I have an example of a diversified portfolio. Nigerian stocks 40%, Nigerian fixed income 15%, Nigerian real estate 10%, then maybe US fixed income 15%, US stocks 15%. So all your portfolio is 100%, but it's advised that you split it into different asset classes, different countries, different times, so that you'll be able to meet your goals if your goal changes. Keeping in mind the initial investment RX, let that be your guiding principle. Do not invest until you clarified all of those things. So now it's time for a mini reflection. I will give everyone 2 minutes to write down what one thing you've learned from this. Okay, one money or investing habits you want to fix over the next 12 months. Based on what we've said, based on what we've heard, based on what we've seen, if you just take 2 minutes of your time to maybe just make one note of what you're going to do differently. It can be you're going to try to learn more about what I've said, or you're going to start planning how to invest small amounts every month. Anything. So I'll give 2 minutes, and 2 minutes starts now. Yep. So just write down one money habit or investing habit you want to fix over the next 12 months. Fatima, is there music you can play while we are waiting?
No, sorry. There was no provision made for that.
Okay, that's fine. We'll just wait for time to go. Okay, 10 more seconds. Okay, so 2 minutes have passed. So if anyone wants to share one thing, maybe one or two people that wants to share one of the things they've written down. If you someone like that, I want to share. Okay, if you want to share, that's fine. It's private to you. So we'll move on. We're almost done with the slides. So how to stay safe. Now that we've talked about different opportunities in the Nigerian markets, you need to now be aware that there are some people that will try to scam you and dupe you of the money you're trying to invest. So these are some steps you can use to stay safe and do not fall prey to false investment opportunities. First of all, if the return sounds so good to be
Excuse me,
true,
Mr. Chukwuka. Somebody just dropped something on the chat box.
okay, can you please read it out?
Um, She wrote, this is from Deborah Ojo. She wrote, explore Nigerian investments. I think this is
Okay.
relating to what you asked earlier.
Yeah, that's a very good one. Yeah, there are so many opportunities that are available that are safe that you can explore to improve your earnings over time. Thank you, Deborah. So, as I was saying, one of the ways to avoid scams is to compare promised returns with what you can actually get in real life. If someone is telling you invest 100k, in 2 weeks time you get 900k, that's too much. That return is too high when it's not cryptocurrency. So if it sounds too good to be true, it probably is. Do your research, do your findings. Also, if the investment is not backed by a regulator like the SEC, like the CBN or NDIC, be very careful. One thing I usually do, I'll just run a Google search, say is company XYZ registered with the CBN or SEC or NDIC? Most times, if not, you see other people have actually searched for that thing, then you see results saying that, oh no, avoid this person, avoid this investment, avoid this company. Be very aware that people can, some companies that can even lie and say that they're regulated, but you can do further research and you find out whether they're true or not. Also, if the person that is recommending an investment to you cannot explain exactly how it works, be very careful and ask the right questions. If it's too tough for the person that's even marketing to you, then it might be tough for you to also understand how it works. Also, some scammers tell you send the money right now. In 1 minute, the offer will close. Send your money now so you don't miss out. It's a once in a lifetime opportunity. Don't don't fall prey to that pressure. Calm down and do your research very well. Also, watch out for pitches that tell you that everybody is investing in this. Also invest. Come and invest. Don't let what people are doing to influence your own decisions. Remember our investment RX. Think about whether it matches or it suits your own investment needs, and know and decide whether you're interested in that product. Also, be very wary of unsolicited offers. If someone just comes and meets you that, okay, well, do you know there's one land in Magboro I can invest for just 20k, 20k only, and then you can in 1 year time you can cash out for 25 for 30 million, one kind of ridiculous amount. Be very careful. Don't let mouth-watering opportunities to deviate or to move you from your own investment goal. And also, every investment has a degree of risk, which will also show in the return. If you remember what we said earlier, that risk and return are like two sides of the same coin. If the coin is going up, then your risk and your return, they are both going up at the same time. If they tell you that this thing is risky, oh, but it has a guaranteed return, run. Then lastly, when you're in doubt, please ask questions. You can always learn from other people's experiences without suffering losses. Don't be shy of asking questions. That's some people say experience is the best teacher. I just like to edit it and say other people's experience is the best teacher. I don't have to experience it before I learn. I can learn from other people's experiences. And one of the good ways to learn is to ask questions about investments. Oh, somebody entered my DMO and said this investment is offering 75% in 3 weeks. What do you think? Should I proceed? What do you advise? So asking questions like that will expose scams where they are existing. And then key takeaways from what we've said in past 40 minutes or 5 minutes. That's number one, start small, start now. Just like a tree. I watched one Chinese movie. Chinese movies usually have lots of wise quotes. They say that the best time to start planting a tree or the best time to plant a tree was 20 years ago. The next best time is now. The same way for investing, if you had invested 20 years ago, by now you'd be smiling. But since you missed that window, you can start now so that the next 20 years you'll be smiling. And you can start with as little as 5,000 naira and increase as time passes. Those apps that I put on the previous slides, you can check them out. They offer low entry investment amounts. Secondly, and most importantly, is that and very importantly rather, that you should invest in learning. That's why I like what Deborah said, that she wants to learn more about Nigerian investments. Please do ask questions, read online. You can follow sites that talk about investments to get started, to make sure you are increasing your knowledge, because how far you go is oftentimes limited by how much you know. So learn from verified platform about assets, about strategies and tax management strategies. And one quote from Warren Buffett was that one of the best investments you can ever make is in yourself, and that investment is not taxed at all because the government can't see it, but you know it and you have it. So keep learning. Then number three, just like combination therapy, a well diversified portfolio will help you manage risk and help you to achieve your investment objectives. Number four, time is your friend. Wealth building is not a sprint, it's a marathon. It takes a long time. Same way, I like to just analyze. The best way I think of investing and time is planting a tree. If you plant a tree today and one more time you go out and you see the tree, just know that that tree is AI. It's not a real tree. Just cut it and just destroy that tree because that's not how trees work. Trees take time to grow. And the more they grow, you keep watching it until time comes that you don't even need to water a tree anymore. Tree just keeps growing and then start bringing fruits. Allow time to work for you by investing over time, gradually. Maintain a portfolio that is balanced across short, medium, and long-term horizons. Don't put your money in the long investments and then in the short term you are trying to meet basic needs and there's no cash. In the same way, just balance it across time because time is really your friend when it comes to investing. And a very important and fifth point and final point for this slide, know yourself. Remember the investment RX. Sit down, answer those questions, and then if you need guidance, you can ask questions. Once you have clarified what your investment, your return objectives are, your risk tolerance, your risk liquidity needs, your tax situation, then that should guide your investment decisions. If somebody, one of your colleagues is doing something else that looks totally different from yours, that's fine for him, but not for me because I know my RX, I know my investment RX. I'm going to stick to it because that's what I think will work for me. So know yourself, don't be moved by pressure, don't just allow what people that are going to influence you unnecessarily. And then lastly, I also do a small case study of someone that's maybe he's a doctor. His name is Dominic Peters. He is a doctor, medical doctor. He's 28 years old. He's married. Doesn't have any children. But so far, the amount he has in the bank is 1,520,000 naira. And his objective, this is his investment RX. His objective is capital appreciation and growth. He has high risk tolerance because he's a man and he's 28. He's young. He's married. His liquidity needs are low to medium. Since there's no child yet, he might not need so much except money for him, he and his wife. Tax status, just normal taxes. Then unique constraints that he does not. He hates companies that make beer. Never invest in companies that make beer. Maybe something happened to him that he could not when he was younger or something, but he hates beer and companies that make beer. So that's his unique constraint. So based on all of this, based on his investment RX, look at his investment objective. Since he's looking for capital appreciation, which is his money growing over time and growth, then stocks is a good opportunity, is a good option, and the real estate is also a good option for long-term horizon. Also, risk tolerance, because he has high risk tolerance, he can do stocks, he can do real estate as real estate investment trust. And because his liquidity need is low to medium, then for money that you need in a short while, you can do mutual funds, you can do fixed income. Then for money that doesn't need for a long time, you can just put in stocks. Then for the tax status, normal guy, normal Nigerian, you can do stocks, real estate, short-term fixed income as well. Then for unique constraints, because he hates any brewery, any company that makes beer, you tell his investment manager never invest in breweries company. Any stock you're investing in must be non-breweries. It might be healthcare, it might be telecoms, it might be banks, anything but breweries, and also fixed income. Then other constraints you might have, it says that okay, every time I want to always have at least 5% cash in my portfolio. So now this is now Peter's portfolio. As you can see here, he has stocks 58%, fixed income 23%, mutual fund 10%, REITs 9%, and cash. Oh, okay, I should have clear cash here. I will include cash. So cash should be like 6% here. So you can also achieve more diversification by investing in different assets, different countries, and so on and so forth. So we are done with this session. Now I will take questions if there are any. Thank you so much for listening. Fatima, over to you.
Okay. Good afternoon again.
Good afternoon.
Thank you so much, Mr. Edoziuno, for the insightful practical session. Does anybody have any more questions or any questions to ask? You can just answer. You can ask any questions if you have any, please. You can ask questions as well.
Okay, there's some questions in the group in the chat box.
Okay. So Inyoluwa Ojo just asked on the under real estate, where does crypto stock belong? So Mr. Edoziuno.
Okay, yes. So Crypto Stocks is a peer-to-peer, is like a crowdfunding platform for investing in real estate and digital assets trading. I think they do some crypto as well. I'm not sure. I don't really use Crypto Stock. But from what you've explained, Crypto Stock most likely falls under this crowdfunding platforms. So where it does, based on what I've seen and heard about what they do. So it's a crowdfunding investment platform for real estate assets. Okay, I can also see a question from Deborah Ojo. She's asking that how wise is saving in USD accounts in Nigerian banks like GT Bank, but the dollar account? Well, so you saving in USD is like just keeping cash, USD cash, but you can actually in Nigeria there are many mutual funds that allow you to invest in dollar funds. They call them dollar funds. You can find there are many asset management companies in Nigeria. They have dollar mutual funds. Like there's one by Chapel Hill, there's one by Meristem, there's one by Coronation, there's one by AfriInvest. Virtually every management company in Nigeria, they have dollar mutual funds, and those ones offer way better returns than what can ever get. As in the banks, I hope nobody works in the bank here, but the banks they do not. I mean, I don't know, but they don't offer the best returns for retail investors. Assuming you had like $200 million, yes, they can now negotiate with you. Okay, we can give you 12%, we can give you 9%. But for smaller investors that have maybe $10,000 or $20,000, they do not really give so much rates or so much return. So you can just search online for dollar mutual funds in Nigeria. You see, they'll tell you to download their app, and then you do that and you invest your USD there. It's better there than in the bank because the bank is not giving you so much return. So use dollar mutual funds instead of putting money in the bank. Okay, I can see Opemi Kalejai raising her hand. Yes, you can ask Opemi.
Sorry, Toluwalope. Person asked, said, I made a little investments in real estate under crowdfunding, but the company liquidated. How can we get genuine ones?
Wow. So sorry about that, Oluwalupe. Well, the if you remember what I said earlier about regulation, make any company you are investing in, make sure that this is regulated by the SEC or an NDIC especially. So when a company is regulated by NDIC, if the company folds up, NDIC has insured some of your money, so you can get some money back. But if this crowdfunding company is not regulated by NDIC or CBN, there's no way to get money back. So now that you know, you can just go online and check and search for. So that's a few recommendations I put here. Let me go back to it. For real estate, you can check out Rise Vest. Yeah, they do US real estate, but they also do Nigerian real estate. You can check out Rise Vest, Trove, Cable. So these are some of just a few examples that are regulated by the NDIC and CBN and SEC. So make sure you must see in their website that they are regulated by SEC. You can even call to verify that they are actually regulated by SEC, at least SEC, then maybe NDIC. That's how you make sure you're investing in a company that is well covered and well regulated to avoid loss of your funds when they if something happens to them.
In
Okay,
your
yes.
culture, just another question. Said
Okay.
once take on full of thoughts that until you have saved up enough for emergencies and your expenses twice.
I don't agree with that. Actually, I don't agree with that because, yeah, and I guess the fact that emergency fund is to help you should ideally hold twice of your monthly expenses so that if something happens, you can fall back to it. But me, the best approach from my experience is that while you are building an emergency fund, be investing at the same time, grow both of them side by side so that by the time you have achieved that target for emergency fund, you can now focus on your investment. Because due to that emergency fund, usually you keep it in a very cash in a liquid assets, and liquid assets have low risk, and low risk means low returns. So you are losing on that end. What you do as you are growing your emergency fund, also be investing. Do it side by side. Don't life is never about an extreme. Life should always be balanced. So balance it. Let's say if you have about 100K to invest or save, do 30K emergency fund, 70K investments, so that time will even come when the return you will get from your investment, maybe fixed income, for example, can even cover the emergency fund they're trying to raise. So I won't advise you ignore emergency fund and focus on investing. The same way, I won't advise you just ignore investing and focus on emergency funds. But you can grow both of them side by side as time goes on so that you're not losing on either end. Okay, Miss hand has been up for a while. So I think you can ask a question, then we'll take the one of best question.
Thank you very much, sir, for this wonderful presentation. Please, I would like to ask, you mentioned something about diversifying your investments. So, as someone who just started investing and is quite conservative, so how would you advise that the person diversify her investments? For example, if I don't have, I would rather just, I don't have appetite, I'm not risk, I don't like anything that has to do with risk. How do I still diversify my portfolio, even with that kind of um, risk averse? Yes, even if I am risk averse, how do I still diversify my portfolio? And how do I
Okay.
also go about diversifying my portfolio as a new investor? Thank you.
Okay, thanks for that question, Okwemi. To be honest, I have friends that all they do is fixed income. Like they don't like equity, they don't like risk at all, and they are very fine with it. So if you remember this slide I put before about diversification. So there's sector diversification, asset class diversification, and then time diversification. So if you hate risk completely, you don't like equities, that's totally fine. You've done your investment RX. You understand that me and risk are not friends at all. Okay, let's take away equities. Let's take away stocks. So you can focus on real estate. You can focus on fixed income. You can focus on mutual funds. And even if you say I hate real estate too, I want to do only fixed income. That's fine. Your diversification is based on fixed income. And if you're just starting out, just have it in mind that I should not invest all my money with REM money, or I should not invest my money with piggy vest, or I should not invest my money with which other one is there. The other ones, know that you should invest across different places. That's like it's similar to company diversification, so that you do not. If something happens to piggy vest today, hey, hopefully not happens to piggy vest too. But if something happens, you have investments in other places that will not completely cripple your finances. So it's fine to avoid a particular asset because it's risky, but just make sure you are diversifying in your chosen assets, fixed income. There are different fixed income. There's commercial paper. There is let me go back to that slide. There's commercial paper, there is short term, there's medium term, there's long term, there's fixed deposits, there's treasury bills. So just diversify across different types within the same fixed income so that you'll be well protected against negative events. And if you're just starting out, you can just list out different ones that you're investing in. You would like to invest in. List one, list two, number three, number four. For the first time you're investing, go to number one. For the second time you're investing, number two, number three, number four, like that. So doing that over time, you'll be building your assets across different diversified sources or locations and not just in one place. So it's fine if your investment RX in the case that you hate risk, you don't like equities, you can do fixed income, purely fixed income, but there's still opportunity to diversify even within that fixed income by investing in different companies, investing across time too. So that will help you achieve diversification eventually.
There's another question in the chat box, sir.
Okay. Okay, what percentage would you recommend for savings and investments from salary, especially for a married person with children? So there's in finance or even finance generally, there's a rule or a guideline for investing or for personal finance generally. It's called the 50-30-20 rule. 50% of your income should be for needs, household expenses, family expenses, then 30% should be for maybe wants, things that you need to settle around the house that maybe your needs cannot cover for. Maybe dining out, going for weekend stuff, etc. Then 20% should be for investing. You should just take out 20% first. So if that's the case, if that 50-30-20 works for you, then that means that 50% is for your, maybe you can save for your child's school fees, pay NEPA bill, food, transport, and everything, or 30%. So that's this 50-30-20 is not fixed, but just make sure you've done your investment, your own budgets. You've seen that, okay, how much can I consistently save from my total income that will not offset my ability to pay my, if maybe your child comes and says, oh, so I should pay so and so in school, and you did not plan for it, there'll be enough money to meet that need because you've allocated sufficient money for wants, for example. So it depends on people. Maybe you and your spouse can just sit down and then look at your finances. But ideally, globally, the optimal percentage to invest or save is 20%, so that you're not overspending. But again, it depends on your situation. If both you and your spouse are working, then I think you'll be able to do 20%. But if not, you can just do less than that. It might be less than 20%, might be more, but it's remember what I said, that know thyself. Your investment RX should guide how you invest, how much you invest. But that's what I'll just say. It depends on you, but ideally it should be 20%. Okay, Ori Moloye has a question. Tulu Balashe. Yeah, you can go ahead to ask a question.
Hello, can you hear me?
Yes, I can. Good afternoon.
Okay, good afternoon, sir. Thanks a lot for the presentation. My question basically centers around stocks. So,
Okay.
in the older generations, you hear a lot of their parents telling you things about investing in stocks being like one of the mainstreams for them at the time. So, does it still hold as much validity now? And are there companies, are there genuine, the apps you put up, do they have a means of also investing in stock in a way that can be controlled and is not in a way that you would, are there, to be guided about it, are there managers, are there organizations that can help go about that? How can we access places like that?
Okay. Yeah, thank you for your question, Tulu Balashe. There are many. There are a number of companies that offer investing in stocks today. Just the way they offer fixed income, they also invest in stocks. All the major investment companies in Nigeria, I'm talking about Stanbic, Chapel Hill, AfriInvest, Meristem, all of them, they all have apps by which you can invest in the stock markets. So you can just search online. Those five I mentioned to you now: Chapel Hill, Stanbic, AfriInvest, Coronation, Cardinal Stone. There are many. They all have apps. So you can just go online, download their app, open an account, and they even usually send recommendations or they send reports based on how different companies are doing. So you can get the app, sign up, and then when you get and when you need, if you need any extra assistance, you can always call the customer care. But they have this today. It is very easy to open an account with stockbrokers and just invest. It's very easy these days. Just download the app and that's all it takes.
Okay, thank
Okay.
Does anybody have any more questions? Okay, since
Thank you so
nobody
much,
has
Mr.
any,
Okay. Thank you so much, Mr. Edoziuno. This was an enlightening session. We really, really appreciate you doing this for us. Um, we hope, to even have you come and have a physical session, sometime in the future when we have one, because this is very, very insightful. You are a great teacher. Thank you so much. I wish you a pleasant day ahead.
since there won't be any more questions, as we wrap up today's edition of Money RX, I'd like to sincerely thank our facilitator, Mr. Chukwuka Edoziuno, for sharing such a valuable knowledge with us. To everyone who just you gained practical insights and you've learned a lot today, and you've learned a lot that will help you build wealth and achieve financial freedom. Please remember Medics of Duty Healthcare Academy for future sessions. On behalf of the organizers, I wish you a wonderful day. Stay safe, stay empowered, and see you at the next edition of Money RX. Bye.